How would you like to make your first million? And today we have Steve joining from United States, which is an income coach. So Steve, tell us, what are the 5 steps to make your first million?
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
What are the 5 steps to make my first million? Just like that. Okay. I will give you, okay. When you get your first job, you look around and you try to put yourself into a position where you're learning about something that you can do yourself, that you can learn a business within your business, so to speak.
Very
In
powerful.
my case, I was working for a very big life insurance company in Manhattan, and I was in their pension investment department. So I was associated with investment managers, and I saw how they were managing our investment program, our savings and investment program, and so on. And I saw things that I liked, and I saw things that I didn't like. So I liked the quality. I liked the research that went into it. I liked the diversification. What I didn't like was that they didn't produce enough income. They were more focused on market value, and they never took profits. And there was reasons for that. So my second thing was that when I started my own, if and when I started my own gig, I would be focused on the income I produced for people and on taking the profits when they were there. Because, in 3 or 4 years of working in that type of environment, you saw the markets going up and down many times. And these guys just sat back and really didn't do anything about it when it went up. They didn't take their profits. And so, so that's the other thing. A third thing that you need to recognize when you're starting your own business is there are outside influences that you have to be aware of. I would say in any business, you have to determine, how you're looked at by regulations, and how you can make yourself fit regulations. In the case of investing, and you might be surprised by this, believe it or not, there was a conversation once I had with one of the investment managers on a plane going out to Seattle to visit Boeing, who was one of my clients of my employer. And I was looking at the investments and talking about with the manager. And I said, "Why do you own so much Boeing stock? You own millions and millions of dollars in Boeing stock. You've got millions of dollars in profits. It doesn't pay much of a." Remember, this was back in the 1970s. Boeing didn't have any problems with its aircraft at that time. Okay. So, so you just sit there holding this huge amount of shares. You don't make your profits. It's not generating a lot of income. I'm one of the investors in this program. I'd like to see more income, he said to me, "Steve, one of the things you have to realize in the investment world, particularly when you're a manager for large companies throughout the globe, Boeing wants us to have a lot of their stock in our investment programs. So we really don't have the luxury of taking profits and changing. We need to keep Boeing happy because they're a big insurance client of us, of our company." So the light bulb went off and I realized, that it's not all economics. It's not all profits. It's not all PE ratios and debt to equity ratios and
So
profitability
take
and
your
stuff like
profits
that.
out like that. It's a
It's
little bit more complex
politics.
than
It's politics, so you
that.
got to be aware of these outside influences. Okay, so then the the fourth step, you've got a business up and running, but you got to manage it. You got to control it. So you got to develop targets. You got to develop disciplined ways of going about your process. You've got to streamline your decision making so that everything is fluid. And of course, you got to recognize exactly when you need help. You need to have people, a good person, then you need a good couple good people, so forth, to help you keep it going. Keep it going. You have to develop a decision maker. So this is all part of that developing stuff. And then the final thing you have to, particularly if you're in a business like mine, where I was managing other people's money, and I was managing it in a different way from the ordinary. I wasn't trying to chase market value and trying to pick winners in the stock market that just kept going up and up. I was looking to provide my clients with spending money, with the money they needed to go take a trip to go to Madrid, and then follow it up by going spending some time in Portugal and possibly visiting the Canary Islands on the way home, things like that they didn't have to worry about where the income was coming. So when I set up my business with people, I would tell them, I'm going to focus on generating income. I'm going to take profits. You're not going to have all these pretty green numbers that say you've made your Microsoft is worth all this money. You're going to have income. So we're going to measure performance by how much income I produce. And not only that, but I'm going to make that income grow
Wow.
every quarter and every year. That's my objective. And my second objective is I'm going to take more in profits for you than you pay me in fees.
Wow.
And that's how you set up a
Big promise.
business. That's how you set up a business where your customers aren't going to call you every time the market drops a couple hundred points. We never got phone calls.
Wow. That's
There you go. That's
Steve,
the big
that's
five.
fantastic. The more I hear, I want to hear more. So let's start from the beginning. Yeah. Why, if you have a very comfortable corporate job, making a lot of money in Manhattan, yeah, with a very good pay and everything, why you decided to give all this up and start your own business? Do you have any idea how risky is that, especially when nobody knows you? So,
Uh,
so,
okay.
so what happened there? What happened?
What happened was this. You're gonna love this. I might let's see. Oh, she's not here. My my it's we were at a party once. I was managing my own money using, you know, the company's plan to select my securities from. And I was doing what I said. I was focusing more on income, so I didn't buy any of them that didn't pay dividends. And I had municipal bonds and other corporate securities in there for income, and I was taking profit. So I was doing this and I was doing this, and I was working for them at the same time.
Making
And
very good money,
I
because
no no
this company make you very
no,
comfortable.
it wasn't so great. It wasn't, the salary was not really that great. Remember, we're back in the 70s now, in
Not like
70.
now that they pay a lot of money, right?
Yeah, and it wasn't a lot of money. My wife was a legal secretary, and she was making as much money or more money than I was. And
Wow.
she didn't have to commute to Manhattan.
Wow.
And so we were at a party. We were at a party. I guess it was around the holidays, and they had a party. And she came in. I had her come in, and we went to this party. And when we got done, and she and I were talking and joking around with some of the people, and she was observing things at the party. And when we got home, she said, Steve, You know what I noticed? I noticed that every other guy made it a point to go over and talk to the two senior guys and, rub their backs and kiss their butts during this thing. And all you and I did was talk to some of your friends and our friends and have a good time. We partied. They made it a political event, and
They went there to work.
so unless you learn how to suck up to your bosses like that, you're not going to go anywhere in this company, you know? And you don't make that much money anyway, but you're
Mhm.
not, my feeling, and I always respected her judgment of things. So I was running my own portfolios at the same time. And I was fortunate enough to have I was able to do that. And using my methodology, I was literally making more money than I was employed by this company.
Wow.
And in 1979, I was making between 4 and 5 times more trading securities,
Wow.
trading these high quality income producing securities than I was employed in New York. And
Very impressive.
so I came home one day from the office. I said, "Well, Sandy, I hope you continue to make a lot of money and for your lawyers for your legal firm because we're going to be living off that and the income from my securities because I quit and I'm going to start my own management business." And that's what I did. I called a friend of mine that Sandy and I met on our honeymoon and my dentist, both of whom had successful businesses of their own. And I said, here, I want you to look at my portfolio when I started 5 years ago. And I want you to look at my portfolio today and look at the amount of income it was producing then and what it's producing now. And then I want you to show me your portfolio and how much your portfolio is producing. And I'm going to make you produce as much money or more than I do. And they said, that sounds good to me. And they each gave me a chunk of change to
Wow.
start investing with. And that's how I started. Then I had to get, then I had to go through all the legal work of getting
Compliance, right?
registered with the
Compliance. Yeah.
SEC. I had to take tests and get all that stuff. I had to get my broker to help me with all that. And you have to hang your shingle with a brokerage firm. So I had to put my license with them. And that's where it all started. That's where it all started.
Wow, Steve. So basically, you were not because in corporate this is how people succeed. You get that you get along with the boss, then the boss will give you the best opportunity, and then you have to leave this character that maybe is not you, right? So yeah.
Yeah, and you couldn't, uh there's a couple words that you think mean one thing and they actually mean the opposite. Like said replete with something, I think means it's got a lot of it, but some people don't realize they think it means it doesn't have it. Whereas one word, and my boss was writing a letter and he asked me to look at it to see if I got down right because I was out there doing this project and he was just the boss. And he wrote this letter and it totally had this word that was totally backwards, not the right words. I said, what the hell is his name? Bill. His name was, I'm not going to say his name. He might still be alive. I don't think he couldn't be still alive. He had to be 15 years older than me.
Well,
Anyway, anyway, and I doubt he, anyway, I said, Bill, I said, that's not, you're using this word wrong. And he looked at me like, oh my God. It was like I stabbed him in the back with with the pencil in my hand. I said, yeah. I said, no big deal. I mean, it's a common mistake. It's
You
one
can
of those
fix
words. It's one of those words. It just doesn't. It means the opposite of what you think it means.
it.
he, I swear to God, he was so mad. He threw me out of his office. He says, I didn't bring you in here to do that. I wanted you to, basically, he wanted me to tell me how good the letter was. And I wouldn't do that. I don't do that kind of stuff.
Wow.
It's like now as a coach, I
Oh,
now get
exactly.
people bring me portfolios. And sometimes I say, I know you don't want to hear what I'm going to say, or if they've made an appointment that's 2 or 3 weeks out, and I look at the portfolio they send me and they have 75% of their portfolio in two different securities. I mean, I'll write them an email and say, I think you should consider taking some profits here and thinning down your exposure. What if the market crashes tomorrow?
Mhm,
Ah,
mhm.
you see some great things. Anyway,
I think, Steve, what I love about your strategy, number one, is this one focuses in income. eh?
yeah,
Especially because we need money every month. Every month we need to buy groceries, every month we have to pay rent, every month we need this cash flow. So why, if it's something that we all need, yeah, why people were not investing in this type of securities, this type of things that actually produce the income, which is what we need literally every month. This is the
okay.
main reason why people go to work in the first place.
Okay, now I'm going to ask you a question before I answer your question. I said,
Go
do
for it.
you really want to know the answer to that question?
Yeah, yeah, yeah. Go for it. We
You
want the we
sure?
want we
You
want the
sure
honest.
you might have some corporate suppliers or stuff that you
No,
might.
don't worry about it.
All right, I
It's
won't
all
worry
about
about it.
helping the entrepreneurs.
Okay. The way the investment structure is in our country is that in professional advisors, and particularly their bosses, it's the corporate upper things that they no longer charge commissions to people to trade their stocks. That's pretty much gone. And now they're all investment advisors and they charge advisory fees. And they charge these fees and they're based on the market value
Mhm.
of what you hold in your portfolio. For in for the most part, securities that focus on generating income, like bonds and preferred shares and mortgages, real estate, high income equities, um, they don't go up in price like those sexy tech stocks, that, oh my God, we got a new AI company. We're going to take that thing up $1,000 and they never made a profit ever. Well, how many of them are going to be successful and how many of them are going to fail?
Very
They don't,
basic, yeah.
but the thing is, the market value of these portfolios go up when that happens. And they get paid a percentage of the assets under management. The securities that I use, that I started using then, were, I had a whole set of the portfolio was set up for income because, that's what an allocation is all
That's
about.
what
You
we
need
need. That's what
in
people
you
need.
need
People need the
income and
income.
you need growth. So you want to have a balance there. And when
Between
people
income
get
and capital growth, right, Steve?
Right. When you
I
get
love it.
old, when you get old like me, you want income. So,
Uh,
so
you
I
always want income.
I
But why
invest
you
in
don't want to? Why people don't want to have an income always?
well, they do, but the advisors understand that an income portfolios are boring. They don't skyrocket in price. They produce income, but they don't go up in market value. So there's your
Who
answer.
cares?
This is why your advisor doesn't say to you, hey, we can make you a lot of income here, buddy. Okay. That they don't say that because they know that the income securities aren't going to go up in value to the extent that the high tech or the big companies, blah, 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 are going to go up in value. So that's the reason, generally
Look,
speaking, that people don't
Steve,
focus on income like I do.
well, look in there is in property, right? For example, yeah, there is one property, right? That that a friend of mine invested. Yeah, look the situation. It hasn't gone up in price in 10 years, but give a cash flow after paying the mortgage of $2,000.
Absolutely.
What do you think about this? I love it. Every time that
That's right.
I said, who cares? You cannot predict if the price of the asset is gonna go up and down. Yeah. Um, you can do a research and maybe okay, if there's a new development close to this, maybe the price go up, but we don't win. The reality is that we don't know if it's gonna go up or gonna go down. But the right asset, it will produce you a steady cash flow. And this is but you know what happened with this cash flow? You receive money every day. You know what you do with money every day? You eat.
You're
You
absolutely right.
pay
And
electricity, you put gas on your car, and if you have more of this, you don't even need to go and work. Who cares if it goes up and down? So it's
right.
I
So,
love this strategy that you took, yeah? Going
but you can even compare it. You can compare it to something else. In every aspect of our lives, when we see the prices, like if something, you can get a special deal on something, the cars are down, we're going to have a special, they're all 1/3 off, you want to go buy them, right? If there's a sale at the mall, your wife is going to go see if she can get bargains. In
Mhm.
fact, women always are looking for bargains when they shop. They want it. They even when they shop for groceries, they're looking at the cans. They look at it.
Mhm.
What's in here and what's in here. I'm going to buy the one that has the most
The
value for
best
my
deal, yeah,
money.
most value, yeah.
Yeah. So if you place an advertisement in the mall and say, "Attention shoppers, prices today are at their highest level in the history of mankind. Come on over and buy because prices are so high." That's how they talk to you in the stock market, isn't it? Oh my God, the Dow is at an all-time high. You better get in there now before it goes even higher.
That
Or oh my God, it's down. Sell everything. Exactly the opposite as we approach the rest of our lives. This is what they pitch you in the stock market.
and it's easy to sell like this because our mentality, oh, it's cheap, let me go and buy, it's high. And but the truth is what we're discussing today. At the end of the day, if you have an asset, if you have something that can produce you income, Steve, I mean,
Right.
because that's the other thing. How much money do you really need? Because it's my understanding that if you make 10,000, between 10,000 to $15,000 a month cash flow, I think you can do 95% or 90% that all multimillionaires and billionaires can do. Maybe you cannot have your own plane or
I
things
don't
like this.
I don't know about that with 10,000
But
a
to
month.
give you an idea, so really, if you have, 10, 15,000 a month, producing you steady cash flow, you can do a lot of things with this.
Absolutely. And you
For
can
your
even
life, for your family, for you, and it's not as hard to achieve, right, Steve? With if you have the right plan and the right strategy, is that correct?
right. Right. And the way I tried to manage my portfolios, I told my clients, and I still tell people that I coach, as long as you spend less than 70% of what you earn from your regular income, I can reinvest that 30% and make sure that your income keeps going up.
Mm-hmm.
Okay. If we have an environment where I can take profits, because I take profits when those prices go up, I don't buy more. I take profits.
Very good, very good.
Then I can reinvest that and grow your even money even faster. So I have two streams of income. I have two streams of income, and I use a security that's designed to produce income, not one that's designed to produce growth. Okay.
Mhm.
Okay. So the security is called a closed-end fund. And there are a lot of people that'll tell you that it was developed in Europe in the early 1800s, and they try to say that it was Amsterdam, not not Spain, not England, but Amsterdam, and it was early 1800s, and it's a trust vehicle. And one of the features of the trust is that it has to pay 95% of its earned income net to its shareholders. To its shareholders. Just think if Amazon or Microsoft had to pay out
Wow.
95% of its income to its shareholders. Well,
Hello.
these things, okay, so that's one feature. The other feature of these things is that they trade just like stocks. They're not like mutual funds or ETFs, which do have the goal of market value growth instead of income. Certainly, there are some that pay reasonable or very good income, but more than half, I probably own more than half of the closed-end funds that are available. There are only about 500 available. Um, I own about half that number. The average yields on these things is 9% for stock market, ones that own stocks, and 10% for ones that own fewer stocks and mostly bonds and real estate and stuff like that. Um, so the cash flow is tremendous. Like you were saying, cash flow, cash flow. That's what makes a business go. That's
Yeah.
what makes a business grow. You know, that's what pays the bills, the salaries is cash flow, not growth in market value. So, and the vacations, don't forget the vacations. I mean,
Yeah. And
really.
I mean, I think that the I'm a big fan of cash flow. Huge fan.
I could tell. I could tell.
Oh my God,
Yeah,
yeah.
you get excited. You
I
get a little
love,
excited
I
when you
build,
start talking
I
about
build,
cash flow.
if I tell you I built my property business, when I started, we managed to sell over 5 million, and the whole thing, it was pure cash flow. We were renting the properties. We made the properties up, and then we rented separated by units. Yeah.
Sure.
So I was not buying the houses because I was renting it from the landlords. Yeah, they would give me the houses at a good price,
Hmm.
and then I fix up, and then I would rent the rooms individually. So I didn't need to buy any house, and the whole thing was producing the cash flow because after I paid the rent to the landlord, I paid the bills and I paid everything, and then it was a chunk of cash remaining per house. Yeah, and I have a lot of these houses, and the tons of cash remaining was per month.
And
Because
that,
everybody paid the rent per month, so everybody,
sure.
so my excess is per month, and then I'm not owning anything, and it was just
Sure.
an amazing cash flow. That's why even when we look into properties to have a look to invest, if they are good deal, this is the only thing that I'm concerned. No, how invest in this property because it's gonna go up in value. I said, look, I'm not interested in that. I want to know if after I pay the mortgage and I pay all the bills, how much is left?
What's the net? What's my net
What's
income?
left? That's what I want to know. If
Right.
that is because this house that I'm telling you, yeah, it been there like for 10 years, market go up, down, this, that.
Sure. Yeah.
Because of the location this property is, you get tenants all the time and you get the cash flow all the time.
Right.
It's drop a
And
little bit of
that's
COVID, a little bit of this, but in essence, the cash flow hasn't been affected by the market and will never be affected by the market because the position of the properties in London is, is it get rented uh, easy. So the whole point, Steve, yeah. So why do you want? I mean, would be a plus is for any reason the property increase value. yeah, would be an extra, yeah. But the thing is how can we predict that? You know,
Right.
and in the same way that can go up, can go down.
Right. But if it goes down, you're still getting the rents.
Absolutely.
Yeah. See, and
I
that's
don't
exactly
care I
right.
don't care
It's
if it goes
exact.
down or go up. I don't care.
Are you my brother?
Honestly. Eh?
Are you my Because that's exactly how I approach the stock market. I have all these closed-end funds, just like properties. They all pay, almost all of them pay monthly.
Brilliant.
The ones that don't pay monthly pay quarterly, but they pay
Amazing.
all the time. Okay. They go up and down in price,
But they pay all the time.
but their cash flow is the same. It doesn't seem to matter. I do a couple of things differently. One thing, I don't have as much overhead as properties. I don't have any
Oh, I
insurance
have
and
plenty
taxes
overhead
and
back
things.
then. A lot.
I don't have that.
Maintenance company around,
So that's,
big
but
team.
that's what I call base income. That's the base income that the properties are generating. And I have 240 of these properties, and they're all over the world. And they're
Amazing. They
and
are all
they're all over, and so
diversified.
some of them are going up, some of them are going down. So the ones that are going up, I say to myself, I'm going to take that profit and I'm
Okay.
going to add to my other positions, and I'll still have the same number of properties, but I'll have more money invested. And the more properties I have with the more money in it, the more cash flow I develop.
Okay, Tiff, and if
And there we
this
have it.
looks, if this is a very logic approach that we are discussing here, yeah, and I think it has a lot of logic of the word. So why do you think uh, that people invest in they taking a lot of risk in this invest in this because it's gonna go high, invest in this AI shares
Mhm.
because you're gonna become a millionaire and you're gonna rocket the world and everything. Put all the money that you have here and you will see, and it's all in stored in a piece of paper that doesn't have any business traction in the back. It's all, we can call it a little bit of a speculation. Now the flavor of the day is AI. So now everything that have AI, everybody throwing a ton of money.
Exactly.
You don't know what's, rather than put it the funds in actually in business that okay, you know what, this business have 400, 500 employees. They have all those clients. They turn over this. They will pay these dividends quarterly or monthly, and and this is where and base that income in this monthly income, which is actually the essence of what we really need to operate. This is our freedom. How you buy your freedom? You buy your freedom. Okay, you're going to work. How much money you make? 2,000, 3,000, 10,000, 20,000. You want to buy your freedom? Put it in assets. Put it in places that will give you this
That give
money
you.
monthly, and you can go to work because you want to, not because you have to. Yeah.
Mhm.
So why everybody and I'm glad that you took this approach because you're doing something different than anybody else. And I'm 100% sure that you're very successful in what you do. Yeah. But why you went to the different route like everybody's doing? How tough was to find your clients, or was easy to convince them? They will
At
tell you,
first,
well, Steve, you know what? You're gonna give me money every month. Mm, some of them they were doubting, like,
some of them will say, I already have enough.
if you find me, I will be, yeah, and I
Yes,
don't need to run the houses. I don't have to do nothing, and you will give me a cash flow like that.
yeah,
I would be
but
shooting for that, man.
early on, some people would say, I don't need more income. And I said, you don't need more income?
Oh,
You don't, no, I don't need more income. I need growth. But how do you know it's going to grow? And how am I,
absolutely,
how, if you come to me, I'm going to tell you, I don't know what the stock market's going to do tomorrow. And I don't think anybody else does either. And it's a
you know,
guessing game which new issues are going to make it and not. But if you tell me, look at existing companies that have been doing business for 30 years and are paying me a dividend and I can buy them and sell them. I can do that for you, you know? Or now I said, in the Fidelity, I have my money at Fidelity. And Fidelity each month for I have only three portfolios. I have my joint account, my bride, I've got her IRA and my IRA. Two retirement accounts and a joint account. And every month I get this statement from Fidelity. And of course, I'm a very active investor. I buy and sell every day. Okay. But I look at one thing when I get that. One thing, and I flip through the first three pages on the machine. I scroll down, and then they have this picture, and it's a picture. I don't think you want me to show it to you on the air, but it's a picture I look at, and it shows me what does it call it? Because it's projected income for the next 12 months. So it gives me a list. Here we are in October. It's going to give me November, December, January, all the way through the next year. The income, the projected income. And if most people look at that, it's pretty anemic. Pretty anemic. I look at it and I see,
happiness.
I see happiness. The numbers you were mentioning before, bigger numbers than that, a month coming in every month, And I could sit back like this. I could go on a round the world cruise and never look at my portfolio for a whole year.
Wow.
And that money would just keep trucking in and trucking in and trucking in every month, regardless. I don't operate that. I have an app. I have a Fidelity app, so I can take my profits every day while I'm away. But that's what a person should want to get from their advisor when they've made money in their business and they sell their business and they want to put it to work, when they have a nice salary or a nice business and they're making more than they need to spend and they want to put it to work so that one day they can say, see ya, and I'm going to do this, and you know what I mean? Income. That's what I focus on.
100%.
And in my world, I'm sorry to interrupt you, but in my world, I go one step beyond that base income production, and I have a whole nother stream of income, and that comes from profit taking. And if you take the profits and you have even with a 5%, if you waited for 5%, I sometimes wait for less, depending what's available.
As soon as there's a profit, take it out.
But I look at my base income, that exposure of how much I'm getting a month. And then when I look at the profits I have and I say, well, geez, those profits, in addition to that much per month, I've got another 6 months of income from profit taking. Now that's when you've really got
brilliant
cash flow.
Brilliant.
That's when you've got the cash flow. And that's what I talk about in my book.
Tell us more about the book. Can you show it to us?
I can show it to you.
Where can we find this amazing book?
That's the book. Retirement Money Secrets.
Money Secrets. Yeah, for those ones that want to retire early, right?
Yeah, retire early. Absolutely. Yeah. Retire late. Retire when you wanna. Do what you want to do. What you want to do. And it talks about these things that we've talked about, plus risk minimization. It talks about the market cycle and this mindset change that you have to make to get focused on income. That's what it talks about.
And Stephen, where can we find this book? Tell us the title again.
It's Retirement Money Secrets. It's at Amazon. It's at Barnes and Noble. It's at Draft to Digital. Wow. There's an audio book that's at Amazon also.
So Steve, if people are listening this conversation that we have, and they want to know more, and they are interested in what we are talking about today, yeah. Mm-hmm. How people can find you and how the process works?
Um,
For you to become the income coach for them? How is this process?
well, if they read the
Do they need
book,
to have a lot of money, for example, or not really?
well, I've been coaching people with, as most people who come to me have at least six figures
Mhm.
in their portfolio, or the possibility of more, or what am I going to do with my rollover 401k when I get my hands on it, like that. So most people are 45, 50 years old. Most of them are at least 50 years old. Many of them are already in retirement when they
Mhm.
when they come to me. But the best thing to do is really to read the book, because then they're not wasting money asking questions that the book already answers. So then they come in and I look at what they have. I point out anything that I think is dangerous right away if it's not diversified properly, things of that nature. And we talk about that. We talk about any questions they have, and then we set up a plan, an action plan. We're going to get you from less than 3% income, which is now what you're getting, and we're going to get you up there in the 9 or 10% range. And then we're going to have profits on top of that.
Mhm.
That's what the objective is going to be. And I
Any
sent,
solution, Steve, for them, for those entrepreneurs that they have a small business that they're making some money now, yeah, not too much, and they want uh to diversify. They want to use this cash in some places that producing cash flow, because even if they put this money now and in assets that produce cash flow, yeah, what happens is that even that income, if they want to reinvest it in the business, they can. A lot of people, what they do, they have a business, and then when they make a profit, they reinvest in the business, put all the profit in the business. Then technology change, something happen, you go out of business and you lose everything. Right?
right, right,
Take this money, put it in an asset that produce you cash flow, take this cash flow, put it into the business. If you go out of business, still you have your asset producing you income.
exactly. Right. And
So, so what advice, Steve, do you have for those entrepreneurs that how can they start the journey to to um to start to purchase this type of assets or this type of
right.
stock that actually
Y-
can uh
Yeah,
they take the money that they're making now and right and reinvest it direct in the business. They put it into a vehicle that give them that cash flow that even can give them profits, yeah, but they take on this profit, and then if they want to reinvest all this every month in the business, in marketing, whatever, they can. There's no problem with it, but at least they have a safety net, because reality can hit anyone, yeah. uh Even my own business, Airbnb came, there was whatever, technology, and all of a sudden, phew, after sold 5 millions and whatever, all of a sudden everything is gone.
oh yeah.
So
Yeah, I mean,
it
it's
happens. Yeah, people think that the business is gonna last forever. It doesn't work like that.
well, it
Maybe
may
yes,
last,
maybe not, but
but the business can outlast you, but you have to be able to sell it.
mhm.
And you can't afford to sell it unless you have replaced that income on another stream
Somehow,
of income that
somehow.
replaces your income. And that's exactly what this process does. That's exactly what I did when I sold my business in May of 2023, just 18 months ago or so.
Wow.
And in the financial community, they don't give you the whole thing all at once. You get maybe half of it up front, and then you have to
Wait.
behave yourself and be a good boy and not take the clients away or go into competition, all this other stuff.
And then
So
little by
18,
little you get the
18
rest.
months later, you get the rest. Well, if you don't have significant cash, if you've already developed a lifestyle and you have these expenses, if you're not paying for it from your outside investment portfolio, you're going to lose half of that payment before you even get it you know
Absolutely.
so
Honest.
that's what I did. I mean, I s- I lived on my income from my portfolios,
Mm.
and I developed my coaching business immediately. And mine, even though I waited 18 months to get the back end of my payment, I didn't go backwards during that
Mhm.
period of time, asset wise, at all.
Absolutely.
And I didn't stop traveling. My wife said, maybe we should maybe we should put the brakes on for this year until you get the back end payment. And I said, no, there's no need to do that. We got plenty. And when you can say
It's
something
already
like,
taken care of.
when you can say that, then you know that, yeah, you've got your income in place. And using the methodology that I've developed over the 50 years of investing that I've done,
A
I
lot of
think I
experience.
think
A lot of
everybody
experience.
has a good chance in getting to that place.
So, Steve, if somebody has 2,000, 3,000 to invest, the first thing they need to do is read your book. And after, what can they do?
After they read the book, they'll discover that there is this type of security out there that you can get into, with a very small expense. With $2,000, you can buy a portfolio that contains pretty much every stock in the stock market in a managed, controlled arena that pays out a 9% income stream to you while you're doing it.
Amazing.
So yeah,
Spectacular.
so it doesn't matter when you start, you can get started this way.
Yeah.
So
Steve, thank you so much. I think our conversation has been amazing. I think that we touch a point here that nobody talks about because like it's not convenient. Yeah, it sells easy to say, okay, buy this stock cheaply because you have AI and you will become a multi-millionaire tomorrow. Yeah, this is what sounds
yeah,
very
yeah.
easy. Yeah, and it's a huge risk, and you know it, and we know it. It's a huge risk that goes into the equation. And okay, hold on, Audrey, coming now.
Am
So
I in the wrong one? Should I leave?
yes,
No,
come back
I
in
don't know.
Okay.
5 minutes.
Okay, I'll just hit the little X.
Yes.
Listen, tech is not my thing. Okay.
Hey, it was nice seeing you.
Hi.
Thanks for
Um,
stopping by.
So then, so then, Steve, I think we touched a point that maybe is more easy to sell this thing. Okay, take this risk. You're gonna become a lot. You're gonna make a lot of money quickly. Whether reality is this approach that you have taken, which is make sure that cash flow, yeah, comes every month or every quarter to our lives, so we can buy our freedom, so we can work because we want to, not because we have to. Yeah.
Mhm.
Also, use a sustainable way because, like you say, it's a portfolio, so it's diversified, right?
Right.
So you are diversifying your risk, yeah, and
Mhm.
then that income, yeah. The thing is, because it sounds little money, people don't understand, but this little money, the whatever is 9% that is coming every month.
Yeah, it becomes big money quickly.
Absolutely, exactly. When you receive your paycheck, and then you have this thing, and wow, this is coming with me without doing nothing, and it's like a salary. It's literally like a salary
Mhm.
without going to work.
Without going to work. Yeah, there is some work involved in running a
Yeah,
portfolio, but still,
absolutely.
but you're right. It can be passive if it needs to be. It can be passive when it needs to be passive. If you don't have
Let
the
me briefly a
time.
little bit about this, Steve. So, how much work actually goes into place when you are investing in this security? Let's say you put $2,000 or $3,000 in the whole portfolio, in the whole.
Well, the less experienced you are, the longer it's going to take you. I manage a seven-figure portfolio, and it takes me, when the market closes in the afternoon, within an hour, I've looked at everything I did today, and I've placed all my orders ready to go for tomorrow morning, and I'm upstairs doing my Wordle by 5 minutes after five.
Because
So
by moving this order depend on how the market
yeah, but when
change,
you
you
get
can
as you
get
get
better
more.
income. Yeah, when you know what you're doing, right?
Well, you're more secure. You've already looked at the securities. All of these are pretty much the same. They all pay me an average of this amount of money. I'm diversified. I picked this one. It's going to give me the income that I know it will. You have to make decisions of how much to buy based on the market cycle. Right now, as of yesterday, we were at an all-time high in the stock market. So if you're buying equities, even in the funds that I'm talking about, you wouldn't buy as much at the high as you would at a lower price. So you buy less of it today. So when the market goes down, because it always goes back down, fellas, you add to it when it's gone down a little bit. So eventually you get to the level that you want to be. So you have to learn the intricacies of managing a portfolio. But
And
if
this
you do
is
it with this, you can do it much more calmly and with a lot more income coming in while you're learning what you're doing.
absolutely, Steve. So thank you so much for this amazing broadcast. I think that we share a lot of valuable information. And so for our audience, you have the book of Steve, which is amazing. And remember, when we are think about your business in a way that a lot of entrepreneurs out there, you need more money for marketing, you need more money for advertising, you want to get market share, yeah. But that income that you have right now, if you can diversify into an asset that can produce your cash flow, you can use this cash flow to use it for marketing, to use it for everything for your business, and and now you're more safe, yeah. Because we want entrepreneurs to be like Steve. We want them to be happy. We want them to be healthy. We want them to be wealthy. And for that, we need to learn how to manage our money. So thank you so much, Steve,
You're
and
welcome.
for our audience. See you in our next episode of Unstoppable. How great entrepreneurs like Steve break that wall and achieve the first million. Bye for now.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.